pleasure to join everyone today. And I was asked to come on today to sort of give a preview of part of the new fall lineup here on StockCharts TV, which is super exciting. Shows like Market Watchers Live have been fantastic, and I know many of you are faithful viewers, and that's been fantastic. There are so many cool things coming in the next couple weeks, and here I hope to give you a little bit of my piece of that, and that is called the Final Bar. I will be hosting the new Closing Bell show on StockCharts TV. We'll be doing it every afternoon, 4 to 4:30 Eastern time, where we'll hit on a number of things. The goal is to sort of understand what has happened. And again, it's cool to do it after the market is just closed because we can take a step back, see where things settled in, think about how to digest the day's price action, where to be focused, and then start to mentally prepare for what should be coming the next couple days, next couple weeks. What I want to do today is just explain how this sort of came together, what we had in mind for the Final Bar, and then give you sort of a flavor of what to be expected, what types of things we'll talk about, what sort of segments we'll normally do, what kind of guests we'll have on. And I hope that you'll start to join us after the close every day. So the Final Bar actually has a number of different meanings, and I've enjoyed coming on Market Watchers Live and writing on my blog, The Mindful Investor, on StockCharts.com. And I hope some of you have read that and have heard some of my presentations. And if you have, you know that I have a background as a musician, as a classically trained musician, and I often go out of my way to incorporate that into how I think in terms of thinking creatively, but also just the practice of being a musician, how that informs you as an investor. So the Final Bar, the name actually has two meanings for me, and I think for us. The one is I always actually loved one of the features of StockCharts.com, and it's in some ways a very little thing, but in other ways it's actually a really, really cool thing. If you look at the chart that I'm showing, the very last bar, the final bar on a chart, is always highlighted when the market's open on StockCharts.com, and most services actually don't do that. And I always thought that was just the coolest little feature. It's a little thing, but visually it's just orienting you to where you need to be focused. And when I teach people technical analysis, and I've had experience doing that at the college level, professionally, with individuals, and what I've always taught people is start with the current bar, start with the final bar, start with the right side of the chart and work back to the left. Because a lot of beginners start all over the place and just sort of look all over a chart, start to digest things. And what's funny, in my former life at Fidelity, we actually did research, actually looking at screen capturing, actually capturing people's eye movements and looking at where they analyze charts. And beginners actually look all over the place, and they're kind of taking all the information in equally. The professionals, the experienced technical analysts, experienced chart people, started at the right side of the chart with the current price. That was the beginning of their analysis. And then they oriented themselves to how that relates to the past and how that relates to other indicators. And then they started to make some assumptions. So the final bar, that last bar, the one that just closed today, is the most important one. That's the starting point of our analysis. And so with this show, that's where we're going to start. And then we'll kind of go from there and dig into the stories and the themes behind the charts. Now, it also, the name The Final Bar has a great musical reference, and those of you that are musicians, congratulations, you have prepared yourself well to be a good investor, I hope. But essentially, the final bar is that very last piece. It's with the double bar lines at the very end of the piece, and in a lot of ways, for a lot of composers, that ends up being some of the most meaningful moments. That's where you wrap it all up. That's where you complete things and move on. So let's talk with some examples of how we're going to do sort of that thing, wrapping up the final bar and moving on. Well, my goal is to connect the short term with the long term. And people like Tom Bowley, I've always been impressed with how they do that. Tom's looking at, every afternoon, looking at the intraday price action, but he always manages to draw bigger themes and understand how it relates to the big picture. And that's really what we're going to try to focus on together as well on the final bar. Part of the story is the short-term price action. So, airlines have had an incredible 2 weeks coming off of an extreme low. The XAL was just below 90 on the chart on the screen, but it's just rallied significantly. And as of yesterday, just broken above that first Fibonacci retracement level, just above 97. Today, this is again the current bar. We're rallying again. So the question is, it's been a severe price movement, overbought in the short term, approaching resistance and what I would call a confluence of resistance, the moving averages, the 50% retracement level, starting to outperform, emerging as a strong performer in the short term. But the question is, what does that do relative to the long-term trend? Where does this put us relative to where we've been? And with airlines, the challenge on the long term is it's essentially gone nowhere, right? If you look at the price action, it's been choppy. And the XAL for the last year, essentially from this point, from last October, we have gone zero. We have gone all over the place, but directionally have really gone nowhere. And I think the moving averages, the flatness of the 200-day moving average shows that in one idea. So what we're going to be doing is talking about the short-term action of the airlines. The rally has been impressive. I like the emerging performance. I'm not a fan of the fact that we're approaching what I would call a confluence of resistance. We're entering the area where you'd expect some profit taking, expect some short-term pullback. But again, the long-term idea is, where have we been? And we're essentially sideways. So is this the right place to be long-term relative to some of the other opportunities that are maybe emerging, new highs, new lows, something like an Apple, right? Something like computer hardware. That's what we'll try to unpack together. Now, one of the great features, I would say, of StockCharts TV in general is the interactive nature to it. So if you're paying attention to financial media, a lot of times it's sort of a one-way communication system, right? You're getting a lot of information, getting a lot of guests, getting a lot of feedback, but you really don't have a way to interact meaningfully with the people on the other side of the show. And what we're going to try to do is reverse that as much as possible and make it a dialogue, make it an ongoing discussion that we're going to have. And there are a number of ways we're going to try to do that. We'll be taking advantage of the chat functions that you're familiar with, the polling features and things that Tom and Aaron have used on Market Watchers Live. We've got the poll that Tom mentioned about growth versus value, and I'd encourage you to go take a look at that very quickly if you haven't already. But we're going to also explore some other ways to try and do that. And I want to just mention to you now that we have an email set up called the Final Bar at StockCharts.com. And what we're going to be doing is capturing Q&A at all times. So anytime you have a question that you think would be cool for us to address on the air, and it could be a lot of different things. I'll share some examples of what that might be, but it could be market oriented, could be technical analysis oriented, could be guest questions for an upcoming guest. You can send all of that to that email, the final bar at StockCharts.com. Just get in a rhythm of doing that. And then some of those questions, some of those themes we will draw right from the mailbag and put on there and share it on air. So hopefully it will give us one additional way that we can all sort of collaborate. Tom made a great point earlier when he was talking about it, about don't just take what I'm saying, but come up with your own analysis and then compare it to what I'm saying, and then we'll see how those relate. And I'd encourage you to do the same. And hopefully this email gives you one additional way to try and do that. Now, we're only going to have 30 minutes, and any of you that have ever done any sort of video, 30 minutes lasts about 30 seconds when you're actually trying to do it. It goes by very, very quickly. So what we're going to try to do is just hit quickly on some of the key themes that we're seeing. And so every day, my goal is to hit on a theme of the day. And that allows us to go a little bit of anywhere. For example, one of the things that I'm seeing right now is just the resilience and the emergence of consumer staples. So I'm sure most of you are familiar with the RRG, the relative rotation graph. And I hosted the show with Julius DeKempenaar, I feel like that was last week, and we dug into the consumer sectors, consumer discretionary, consumer staples, started at the high level looking at the RRG, the rotation of the sectors, but then starting to dig into the industry groups and then dig into some of these specific stocks and trying to connect what we're seeing with sector rotation into individual names that are driving the emergence of those sectors. So what I'm seeing right now is consumer staples, real estate, utilities. These are the more defensive sort of conservative sectors, the hunt for yield, that are really emerging as leadership, as technology has actually been rotating down back toward the weakening quadrant. It's sort of an emergence, a continuing emergence of some of the more traditional defensive spots. And some of those stocks within consumer discretionary, consumer staples have been really compelling. One of the themes we would potentially dig into if I was doing the show right now is looking at consumer discretionary, which has not in the leading quadrant. It's lagging a little bit behind, but look at how it's rotated more strongly. So as technology has rotated more weakly, discretionary has rotated more strongly. So what's actually driving some of that leadership? Well, if you look within the industry groups that make up consumer discretionary, home improvement retailers are one of the groups that has actually been really, really strong. And at the top of that list, again, this is a mix of large, mid, small caps. You see Home Depot is the highest ranked according to the scooter rankings, and a large cap name, obviously a big part of that group if you look at the group index. So that is one of the stocks actually driving this forward. So what we'll do is try to dig into the emergence of sector themes, dig into some of the industries that are driving that, and try to identify some of the stocks that could provide good opportunistic plays for all of you. Now, we're not going to make it just about the markets. We're also going to make it more educational as much as possible, because I think one of the benefits, hopefully, of StockCharts.com is not just the market commentary, not just the power of the tools, the ability you have to visualize market activity, market dynamics. It's also the ability to learn. And from the very first, in my very first day looking at charts of stocks, I loved asking the guy next to me who was much more experienced, hey, what do you think of this? How would you look at it? And hopefully that is a journey that you can make with StockCharts.com and through StockCharts TV. And what we're going to try to do is unpack not just what we're seeing on the charts, but why some of those indicators and some of those patterns have meaning. As an example of that, one of the things we might take on an educational segment today is looking at RSI. And if you're familiar with Connie Brown's work, she wrote a book that I remember studying for my CMT exams called Technical Analysis for the Trading Professional, if I remember right. And one of her fantastic points that I immediately resonated with me was taking an oscillator like RSI and adjusting the overbought and oversold levels based on where we're at. And if you've ever listened to me talk about charts on StockCharts TV or elsewhere, you'll find I do this a lot because it clicked with me. When a stock like IAC is in a bullish phase, and this is a daily chart, and I'm looking at 2016, 17, 18 here. When a stock's in a bullish phase, when it's going higher highs, higher lows, Dow theory uptrend, look at how the RSI sort of goes into this more bullish mode. It never really gets below 40. 40 actually becomes the oversold level, and it goes well above 70, right? So when there's an initial push, it gets well above 70. Here it gets above 80. Here it actually got up to almost 95 when it gapped up in the spring of 2017 into the summer. But if you look, when the market's in a bullish phase, when a stock's in a bullish phase, you look down and the whole thing just bumps up a little bit, right? So it gets very overbought, never really gets oversold, and the 40 level becomes more of the level that you might want to accumulate the position, right? If you're building on a position over the long term. When that starts to change, when you see the RSI get below 40 meaningfully, so this is in the middle of 2015, if you know your market history, that was a corrective, the market felt very corrective. A lot of stocks were selling off. It was a confusing period for sure, but look at how the RSI went back down into the bearish range, right? So it got well below 30, never really got above 60. So now the whole thing has been bumped down. So looking at where we're at relative to those, the overall range of the RSIs, one of the ways we can start to draw long-term conclusions, understanding the short-term price action. IAC has sold off. This is through yesterday's close when I took a shot at it. The RSI now has gone below 40 for the first time since the end of last year when the market was really correcting, really selling off. So now the whole thing has started to bump down a little bit. The question now is, does the RSI get below that oversold level, which might start to tease the idea that this is entering into more of a consolidative, bearish configuration in the long term, or do we rally back up and we see that this is just one more pullback that allows us to ride the stock higher? So understanding that indicator and digging into RSI and why it might have value right now, hopefully those are the kind of discussions we'll be able to take together. And again, my goal is that you have ideas, you have concepts, you have tools that you can put into play in your portfolio immediately and hopefully start to make some better decisions going forward. So I said making decisions, and the idea of decision making is something that's very, very important to me. And again, hosting the show every day, I hope to try and share some of the mistakes that I've made and also some of the lessons that I've learned working with some really, really capable investors over my career. And for me, it always comes back to your process. It comes down to your routines. It comes down to how those things, your process and your routines, fuel your ability to make good decisions with not just with your finances and life in general, but particularly with stocks and with different investments. So your process is something that I think a lot of people don't like to dig into because it immediately makes you vulnerable. You immediately have to dig into why you're making decisions a certain way, right? Why have you gotten into certain habits, some of which may be unhealthy? And what we'll try to do is get you away from some of those, highlight some of those behavioral biases that might be impacting your decisions and set you up for better routines, better habits, and hopefully consistent, better decisions. And as an example of that, you may know that I'm a student pilot and I've been trying to fly airplanes for the most part successfully on my own and with the help of instructors for a number of years. This was actually a shot I took with my phone out the window. This is I was learning to fly around the Boston area. I was based in Norwood, Massachusetts, which is southwest of Boston. And this was flying back on my first long solo where I flew over to Connecticut, flew down to Groton, Rhode Island, which is Groton, Connecticut, down on the water, and then back up through Rhode Island to Norwood. And so this was the shot of Providence, Rhode Island, out the right side of the airplane. And the good news is when you're flying straight and level, you don't have to be holding on to things too closely. So I was being safe, but took a quick shot out the right side. Now, the reason why I'm showing you this is because this next slide, this was the view out of my left side. So even though I was enjoying the view, kind of soaking it all in, taking it in, I also in the back of my mind was doing emergency preparedness. So on the left side, that's North Central Airport, which is just outside of Providence. I knew that if anything happened right about now, I could easily get over to that airport. And so you can see the two runways, the one kind of, almost looking down and maybe 30 degrees off, and another one sort of perpendicular to where we're at. So at all times, you are looking visually around you. You're looking at your maps. You're looking at the GPS locator, and you're seeing what you would need to do in any case of emergency. So even though I was looking out at and getting a good shot of Providence on the right, I also was trying to have a good backup plan out of the left side of the cockpit. As investors, that is what we need to keep in mind, right? We need to remember that no matter what you're seeing, no matter what you're feeling, you always want to have that backup plan. You always want to have that something in the back, just in case something would happen. One of the key benefits that we'll be able to do, thinking more on the weekly basis, right? If we think of the 5 weekdays on Fridays, what are we going to do with that? And I think it gives us a great opportunity right after the close to wrap up the week. And we'll do a weekly wrap show on Fridays. This will allow us to sort of digest everything that's happened during the trading week, understand how Friday's close has value, and set you up for some things to think about over the weekend, or at the very least, get you some notes, some bullet points to start with first thing Monday morning. And we're going to use, obviously, the strength of StockCharts to try and do that. So this is, I think, Fridays are a really good opportunity to use screens, and not just for idea generation, but also just for understanding what's happening. How many stocks have made new highs and new lows this week? What stocks are up and down on volume? What meaningful crossovers have we had? What's overbought and oversold? What's too extended? What's sort of in the middle of that range? And by looking at some of those themes and seeing where we've seen movement, especially also movements in breadth, right? New highs and new lows, advances, decliners, volume reads. And what we'll try to do is sort of wrap up the week from a technical perspective. And to be honest, I think it's really the only place that we'll really be able to do that together. You don't see that in a lot of places, having a more of a technically oriented weekly wrap. And that's what we're going to try to do after the close on Friday. Should be pretty good. Now, one of the big benefits of StockCharts TV, thanks to the strength of our producers, is we'll be able to bring in guest interviews. And our goal is to have a guest every day on the show. During the week, we'll probably have a guest doing a quick 3 to 5 minute take on things. We'll dig into how they look at charts, and we'll draw on some of the street's best technicians, and also some of our mentors, people that have people whose shoulders Tom and I and others are standing on as we continue to use technical analysis every day. But the goal is to bring in some of those guests, bring in their expertise, and then help understand what it means for you and your portfolio. So again, that email, thefinalbar@stockcharts.com, that's how you'll be able to give me, arm me with the right questions you want me to ask some of these guests, so that we can pick their brain a little bit, give you an opportunity through me to sort of understand their process. Now, what's really cool is we'll also be able to get into deeper conversations with some of the prominent technical analysts and some of the most experienced technical analysis out there. And the goal there is not just to get their take on the markets, but also understand their process. How are they making decisions? How have they learned through decades of practice to do this the right way? I had a chance, just to give you an example, I had a chance to sit down with Ralph Acampora a couple of weeks ago. And Ralph, if you don't know, he's often called the godfather of technical analysis. He literally taught the street how to look at charts. Most investors, professional investors on Wall Street that use charts, took his course at the New York Institute of Finance. He's been teaching there over 50 years and has an incredible experience teaching others how to look at charts and how to draw conclusions from them. We're going to play a quick clip from him, just a 2-3 minute clip. A part of our conversation, then I'll come back and wrap up our discussion of the Final Bar. Here's my conversation with Ralph Acampora. Now, tell me that. So you've taught more people technical analysis than anyone else that I can think of. What mistakes do you find people make when they're learning technical analysis, or if someone that's just getting started with it, what should they try to avoid? What should they try to focus on? What have you found in your experience?
What I find in my experience, I try to make the subject very simplistic and try to look at trends and things like that. And in the dialogue, it sounds easy. It's not that easy. I mean, everyone has their own view of things. My uptrend is someone else's downtrend. I said, come on, guys, this is like piano lessons. Keep practicing before you're putting your money on the line. And I say that to everyone. And I end my classes by saying, my semester by saying, all of technical analysis works some of the time. There are indicators that will work for you and some indicators you don't feel comfortable with. So you have to practice. So that's the thing that I've experienced with students. They leave the class and say, "Oh boy, this is easy. I can do it." No, it's not. You got to keep practicing.
Right.
And there's nothing like experience.
The markets can be a very humbling place to learn those lessons, right?
I have many scars on my back to prove that statement. Yes.
No, you mentioned earlier Alan Shaw, right, who was one of your mentors, I know.
Right.
And you, as I mentioned
yes.
in the introduction, were one of my mentors, and I'm so appreciative of that. Can you talk about, besides Alan, who is another mentor, who, maybe someone that people haven't heard as much about? Who are the people that we should credit for where technical analysis, where market analysis is today?
Yeah. Okay. Just around the time that I started with Alan Shaw, I met a young analyst, a couple of years younger than me. His name was Johnny Brooks. And Johnny and I met on the receiving line because we had to go every morning to a company called Morgan, Rogers and Roberts at 140 Broadway and get the price reversals so we can update our point and figure charts. And John worked for a company called Eastman Dillon, and I was with a company called Harris Upham at the time with Alan. And we met. And Johnny and I became very good friends, and we started talking about, hey, who do you know? Who do you know? And he knew Bob Farrell at Merrill Lynch, which was another in the same category as Alan Shaw, very, very well respected analyst. And after that, Johnny and I went to Bob Farrell and Merrill Lynch, and we asked these guys if it would be okay to start an organization, the Market Technicians Association. And they said, well, you have to go to the senior citizens to get permission. In other words, the generation older than them. Sure. And that's when I met a man by the name of Ralph Rotnam. That's spelled R-O-T-N-E-M. Remember the hemline indicator?
Sure.
Yes, that was Rotnam. Year-end rallies, summer rallies, presidential cycles, that was Rotnam. And I also met a man by the name of Ken Ward. He was just the most wonderful man. And these people encouraged Johnny and I to continue doing that.
So that was just a taste of the conversation I had with Ralph. And again, that was about a 30-minute discussion. We just took a quick clip just to get you a sense of the kind of conversations we can have with people. And again, the goal is to sit down with people like Ralph and understand what they're doing and try to pick out some nuggets to help all of you. I especially like how Ralph talked about, beginners and how you quickly feel like you've got it all figured out, right? You learn some things about charts and then you go to use them and all of a sudden you learn some painful lessons. And again, hopefully what we'll be able to do together is draw some of that wisdom and then learn from it. I also want to share with you, obviously, the goal for us is to take the Final Bar on location. So we'll be actually heading to Minneapolis to have some additional conversations with Ralph and also some technical analysts like Craig Johnson from Piper Jaffray and others that we'll be able to get to in Minneapolis and New York and Boston, San Francisco. Those of you that know the map of the country will notice I did manage to get a bullet on Cleveland, Ohio. You're welcome, Cleveland. Shout out to my hometown. But we will be getting out and capturing some of that content live from people there that we'll share with you. So just one more comment about the mailbag, right? So what we will try to do with the questions you email into us at the finalbar@stockcharts.com is try to answer them. And these are just some examples of some of the questions you are welcome to ask. Questions about the markets. What do you think of airlines? Do we sell this rally or is there further upside? Questions about the product, right? How do we screen for stocks making new highs? What's the best way to drill into an industry? Also questions for some of our guests. Can you ask Ralph about X or whoever that we'll let you know who we're going to be having on in the coming days. You can shoot questions to us, but also questions about technical analysis and the discipline of looking at charts. So keep that email, save that at your address book, and shoot us questions anytime. I want to wrap up my portion sharing you just a preview of one of the segments we're going to be doing called 3 and 3. And at the end of every show, we'll hope to hit on 3 key charts in 3 minutes. And just for the sake of time, I'll probably do it in a little less than 3 minutes here, just to make sure Tom and I have some time to talk here at the end. But I will just share with you 3 charts that are jumping out to me right now, looking at, my routine every day. One is the relative performance of semiconductors. And this is not current through today. So there's been a little bit of a movement this morning, but overall, the emergence of semiconductors is a really important theme. If you're familiar with it, right, semiconductors tend to do very well in bull phases, and it's difficult for the market to do well without semiconductors being a part of that. You can see how the relative performance, this is just a ratio of semiconductors versus the S&P. You can see how it came off in May, but has really rallied pretty well since then. Came off the beginning of August, which sort of hinted at a little bit of internal weakness, but now almost teasing new relative highs. And in my opinion, if that breaks the new relative highs, we can emerge there. I think that will tell you a little something about the strength, the resiliency of the overall equity markets. We're not there yet, though. Second theme I would look at is just the traditional offense versus defense within consumer. This is one of my favorite charts to read because it's looking at how institutions are rotating their bets from more offense in consumer discretionary to more defense in consumer staples. And very simply, when this ratio is going higher, consumer discretionary is outperforming. When this ratio is going lower, consumer discretionary is underperforming, or the more defensive consumer staples is starting to outperform. Now, if you look at the short term, you can see that this has rallied pretty quickly. The ratio has appreciated as some of the consumer discretionary names have done very, very well. But look at this overall rotation from the strength in this ratio leading out of the market lows in December through the spring. And then you can see how this ratio has gone a stepwise motion lower, right? Lower highs, lower lows as this ratio has gone down. That overall showing you how institutions, how people managing a lot of capital that they're able to rotate are rotating to more of the defensive side of the ledger. That isn't what bull markets are born on, in my opinion, right? That tells you overall more of a defensive posturing from the bigger institutions. Finally, we have one of the things that we asked in the poll is thinking about growth versus value. One of the ratios I look at is actually the pure growth versus pure value ETF. It kind of takes out some of the double counting and looks at stocks purely as growth names or value names and looking at that relative performance. Look at how that ratio has reversed so quickly. Went to new highs in August. That was a great sign for the continuing of the growth trade. All of a sudden, look at how quickly that ratio in a week or two has completely dismantled. That dynamic, that evolving dynamic is something I know Tom and I want to address a little further, but I think it's a theme that's going to be emerging more and more on. So to wrap up this discussion of the Final Bar, again, we're going to be every weekday starting on September 30th. We'll be every weekday at 4 p.m. Eastern time through 4:30. I hope you'll join us. Our goal is to help you sort of look in the mirror of your own process, help you think about how you're thinking about charts, try to unpack the action of the day, but really connect it back to helping you make better decisions with the charts, with the tools of technical analysis. If you're not familiar with my work and want to get a sense of how I look at things, my blog, The Mindful Investor on StockCharts, will give you a good sense of sort of where I come from and my background and how I think of charting and how it fits into the overall investment process. So one of the things we just talked about recently was the first chart of the day. What do you start your day with? And that first chart, I would argue, is the most important thing you can do on StockCharts, and be very thoughtful, very deliberate about where you start your trading day with charts. And that's it. This is the Final Bar. We'll be here Monday through Friday, 4 Eastern. And again, remember the Final Bar at StockCharts.com. We'd love to start getting your questions anytime, and anything you send in the next couple of weeks, we'll start addressing immediately when we get on the new show.
That was awesome, Dave.